Hello everyone, my name is Oliver from Lux Trading, and today we're going to be talking about trading losses and how to deal with them. Losses are an inevitable part of trading. With experience, traders will learn how to accept them and actually get useful lessons from them. Let us first start with the win-loss ratio. This is the number of winning trades divided by the losing trades. For example, a trader who has 80 profitable trades out of 100 would have a win-loss ratio of 80%. However, it would be wrong to purely focus on that number and achieve a high win-loss ratio. For example, a long-term trader might have a win-loss ratio of only about 30%, but because they make significantly more profits in the winning trades than the losing ones, they will still end up as a successful trader. With scalpers, it's a bit different. As they are chasing small movements in the market, the risk to reward ratio is lower, and there is not too much potential for realizing a huge profit in a single trade. Nevertheless, even scalpers don't need a perfect win-loss ratio to be profitable. Traders should accept losses as a part of the business, and instead of trying to fight it, they should try to learn from these events. Whether you're new to trading or you've been in the markets for years or decades, you will have losing trades along with the winning ones. Seasoned professionals know that losing is part of the game. No trade is a sure thing. With this in mind, they don't hesitate to accept losses, knowing that if they continue to take calculated risks, they will eventually be successful and profitable. The professional forex trader always questions their every move and precisely analyzes the reasons for which they open a position. On the other side, new and beginning traders don't realize that losses are a normal thing. After a loss, they feel frustrated. Generally, because of the lack of knowledge and experience, the beginner traders cut their losses too late and take their profits too early. They want to catch up as quickly as possible, recouping losses by increasing lot sizes and thus the overall risk taken. They think that if their trading strategy has generated profits in the past, there's no reason to change the approach. Negative thinking and overconfidence distracts the trader from the rigorous conduct necessary to successfully trade over a long term. So, how should we cope with loss? If you have followed your forex trading plan, but the trade went bad, note it down in a trading diary with market conditions and the reasons why you made this trade. Then, focus your mind on something else. It is important that you fully remove yourself from the emotions that come with the loss and get mentally ready to trade with a fresh perspective. After the markets have closed, you can review this particular loss and see what mistakes you might have made. Your trading system will not be perfect for all market conditions. And if this is true, you need to identify which market conditions fit your trading system. That being, for instance, a trending market, a consolidating market, volatility levels, and so on. On the other hand, if you haven't followed the rules of your strategy, you must rethink your approach and find out what is wrong and what impulse got you to put that trade in when you were not supposed to. In that case, the problem isn't your method or your strategy, but the problem is you, since you didn't follow your own guidelines. If you struggle with that, I definitely recommend you taking a look at our Elite Traders package. There, you'll have mentors, you'll have your risk manager, and if you have struggled or if you struggle in the present with self-control and with not following your own guidelines, that might be the solution for you. Now, the most common problems faced by traders are psychological problems. Revenge is a negative state of mind which often occurs after you suffered a loss. Impulsive acts, uncalculated risk, feelings of being all-powerful, and etc. They're all a result of a vengeful mindset. So instead of helping you get out of the loss, you can contribute to your financial decline. Because of this, you end up taking significant risks. During the recovery of your loss, or if you're coming back from a drawdown, it is very important that you take risks that are calculated and then you think rationally and realistically. If you've just made a mistake and lost a lot, don't try to get it all back straight away. Accept that you made a mistake, that you did something wrong, and now it's gonna take time to recoup that. Do not make large trades in a panic that, oh man, I just made a mistake, I lost a bunch of money, I have to take a big risk to get it all back. Because it might work once, it might work twice, but eventually that second big trade is gonna be also a losing one. And that is the moment where it's gonna hurt really badly. So, how do we use losses to improve our own trading? Here are some of the methods that might help you. Number one, review your position sizing. For many traders, we see this every day, position sizing still remains a challenge. Traders simply tend to risk too much. I can't keep saying this enough, but people tend to risk too much. Having a solid strategy and solid risk management will help you succeed through your losses. Number 2, analyze your losses. Look at your trading strategy and see why it didn't work out. Whether it be the current market conditions or any other input, look back and analyze where the problem is. Try to isolate the problem. Try to find out why this trade went bad, and possibly look at what you could have done better, so that for the future, if the same situation occurs, you'll be able to learn and to not make the same mistake again. Number 3, review your exit strategy. First of all, do you have an exit strategy in place? Do you tend to hold on to losing trades? How soon do you cut your losses? As many experienced traders will tell you, the exit strategy is more often than not what will make or break the trade. It can separate the winning ones from the losing ones. And number 4, control your emotions. Fear and greed are 2 of the most potent emotions that can work against traders. Your fear of taking a loss or the greed to make more can very easily work against you. Make sure that you have your emotions under control and use the tools available on your trading platforms such as stop losses to limit the possibility of risk and the size of the loss that you'll be taking. Also, make yourself aware of revenge trading decisions and make sure that you try and fight that sort of mindset. And those are the ways that can help you succeed and learn from your losing trades. Keep in mind that losing is simply part of the game. There is no trader who doesn't lose. I lose, my colleagues lose, professional traders lose trades. There's nothing wrong with losing a trade. You can't be right 100% of the time. But make sure that when you're losing, you're 1, learning, and 2, you're cutting your losses quickly and protecting your capital. And that is it all from me. Thank you for watching. Don't forget to like, share, subscribe. If you have any questions about how to deal with losses, or if you want to learn anything more about us, leave your comments in the comment section down below. And if you want to learn more about Lux Trading Firm, feel free to reach out to our 24/7 live chat or send us an email at info@luxtradingfirm.com. My name has been Oliver, and I wish you all a successful day trading. Have a great one.